Welcome to Coily Crowns. I'm Ashante.
And I'm Lori, and welcome to our Coindom.
Welcome. If you haven't subscribed to our channel yet, be sure to hit the subscription button and subscribe, like our videos, and share with your family and friends. Today, we have a special guest. We're in the middle of tax season, and so we brought in Jenelle to give us some tax tips and answer some questions. So, hi, Jenelle. Welcome to the show.
Thank you for having me.
Thank you for coming. So please introduce yourself and tell us a little bit about your background.
Okay, my name is Jenelle Osondu. I do have a background in accounting and auditing for federal agencies. And also I do perform, I currently have a firm, Osondu Consulting group that I started in 2019, preparing tax returns for businesses and individuals, as well as providing accounting and consulting services. I have been doing taxes, I'll say, for about over 7 years, working at different firms as well. But I just started my own firm in 2019.
Well, so you started it right before the craziness of 2020.
Yeah. I mean, I had been doing taxes for a while, so I was used to it. But yeah, the craziness of, everything that happened with COVID.
Mm-hmm. And so based on that, I guess we could jump right on in there. Tell us about how the STEMI is going to affect our taxes this year.
So the good news is that it's not considered income. It's not taxable, nor is it a loan that you have to pay back.
Yes.
It's actually like an advance of the recovery rebate credit, which is included on your 2020 tax return. And also, if you didn't receive the first or second stimulus payments, the only way to, and you qualify to receive it, the only way to receive it is to file your 2020 tax returns. And then you would get the recovery rebate credit. It would be applied to your tax return.
Okay. And how has last year's taxes, so we have 2019 that affected, I guess, if you received the stimulus or not, like what you just said, but how has 2020's year going to affect maybe the next tax season? Because we received a stimulus this year as well. So will there be any changes that you know about?
So as far as, are you talking about like the third one that's coming out right now? So that one will be the same way. They're still sending out payments now. I will say that if you did not file your tax return for 2020 and you're gonna make more money and you made more money in 2020 than 2019, wait to file so that you qualify and you get the most of the credit or the stimulus check that you can get. And if you don't receive it after they're done dispersing the funds, again, when you file your 2021 tax return, it'll be another credit on there for you to receive it. But since that's new, they're still processing those returns.
Right.
Those payments.
Can you recap what the three payments were and the amounts that's been received so far?
Yeah, so the first one, the amount was about $1,200. I guess is the most that you would qualify for as a single individual. And it's double that for married couples filing joint. The second one was $600, and the third one is $1,400. And a change about the third one is that in the past, for the first two, for a child, they had to be for the dependent, they had to be under age 17 for you to get additional money for them. Mm-hmm. But this time around, they're opening it up to all dependents. So it's $1,400. It will be $1,400 for each dependent if you qualify for it.
For each dependent. So if somebody had like 5 kids, they can get $1,400 for each one of those kids.
As long as they make the income requirements, yeah.
Yeah, that's why they was out here buying crab legs. Y'all don't do that. Y'all don't need to buy crab legs with all this money. Okay.
Crab legs for $1,400?
No, I'm just saying they were just like enjoying it. So.
What they were gonna use the money for. Yeah, I saw a meme that had this one guy, he had like 3 or 4 kids behind him, and he had like $1,400 over each kid's head. It's like,
oh my gosh. So can you tell us, this is all about the stimulus, but can you tell us on a normal tax filing about the types of deductions that you can put within your taxes?
Yeah, I guess some of the normal deductions are like student loan interest payments. So if you pay student loans, only the portion that's attributed to interest will be deductible. and that's capped at $2,500. And it's for, if you're single, you get that deduction. If you're married, it's still $2,500, even though it's two people. But that's the deduction there. If you contribute to a traditional IRA, you can also get a deduction for that contribution. Other ones that people most commonly take, I'll say if you're an educator, so if you provide, if you're educated for kindergarten through grade 12, you can get a deduction up to $250 for expenses that you pay out of pocket and you're not reimbursed for. So I'll say those are the major ones outside of like the daycare credit or child independent care credit. If you have a child under 13 and you have a job, you basically have a job and you need somebody to watch your kids and you pay for them, you get a credit for that as well. And the child tax credit, if you have children under the age of 17, you get a credit, and right now it's $2,000 per child in 2020, but it is increasing in 2021.
Okay.
That educator one was interesting. I didn't know about that one because I always hear about teachers who have to spend their own money to buy supplies and things like that. So at least they get a little break and can claim some things, deduct some of those costs and get reimbursed.
Right. And like what Ashante was just saying, a lot of people were working from home last year for the first time. So are there any deductions for like buying a desk or a chair or a printer or the things that they needed for work?
No, so the home office deduction, as a result of the Tax Jobs Act in 2017, the only people who can claim a home office deduction are self-employed individuals or business owners. And those are the ones that get like 1099s and they do freelance work. You can get the home office deduction there. So it's not eligible for employees, those who receive W-2s.
Right.
Can't get anything for teleworking or anything.
Okay. So last year with, COVID and a lot of people being out of work, a lot of people went to the gig economy. So like the Uber Eats and ride sharing, things like that. How do someone that did those type of jobs, how do they claim the income for that?
So basically, if they would receive over $600, then they should have received a 1099 NEC, which is for non-employee compensation this year, and that's reported on the Schedule C of their personal tax return. If they made less than $600, they're still required to report their income. I believe usually in those apps, they're like records of how much you got paid. So you should be reporting that money. And they also can claim their deductions. So I know a lot of those services, they use mileage. So if they have records of like their mileage or their actual car expenses, they can get a deduction for those expenses as well. And anything else that they paid out of pocket for and they weren't reimbursed.
Okay, that's good to know. So also a lot of people with deductions, I don't recall you mentioning this one, but a lot of charitable deductions you can claim. And before it was up to $300, is that right? Or what is the amount that you can deduct now?
So normally, I guess prior to 2020, those who can claim charitable deductions, they're usually filers who itemize, and a lot of people who itemize, they own houses or they pay a lot of state income tax, or they make large charitable contributions. And the cap there is just basically based on your adjusted gross income. But for 2020 and 2021, there is a $300 deduction for non-itemizers. So those who take the standard deduction, they get $300 for a cash contribution they made to a qualified charitable organization. And then in 2021, I believe, so right now it's just $300 for total, whether you're single or married filing joint. And next year it's going to be $300 per individual. So if you file joint, it can be $600.
Okay, nice. So one of the other things that happened last year was all of these people that were unemployed due to the pandemic and had to file for unemployment. Do you have any advice of how those people would have to file taxes? Because I think there was an option if you file for unemployment to have the taxes taken out upon payment, or you could wait to do it all at once when you do your tax return.
Yeah, so when you first get your benefits, you do have an option to elect to have taxes withheld from your return, similar to when you get a W-2 and you sign those forms. For those who did not do that, yes, they're taxable on your tax return up to, depending on the amount, I'll say. So as of like March 11th, when they came out with the American Rescue Plan, now they're excluding $10,200 of your unemployment compensation from income. And that's as long as you make less than $150,000. So if you filed your return prior to then, the IRS is saying don't file an amendment yet, because they're still trying to come up with guidance on how they're going to give you the additional money. But if you're filing now, yes, that amount to $10,200 up to that amount will be excluded. If you received over that amount, the portion above that amount will be taxable. You do still have to look at the states, because that's a federal benefit, but some states have benefits as well. So look at how your states are doing it.
Okay. It's a lot of information. I don't know. Like,
I hope y'all got your notes.
A trusted tax advisor like Jenelle, especially with this last couple of years, with this last year, with all these changes, things like that. Yeah, I would trust a professional and not do it on your own. Also, with say we have some younger viewers, and if they've never filed taxes before, what are the rules, I guess, of when you initially file taxes? Is there a income max that you make or limit that you have to make before you file? Is it age based? What can you tell us about when you initially submit your first tax return?
So it's not age based, it is income based. So normally, I gotta say for most people, it depends on what the standard deduction is. So right, for 2020, the standard deduction for a single individual is $12,400. So if you make less than that, you do not have to file. And that's for your gross income, including like W-2 income. However, if you are a self-employed individual or a gig worker and you get a 1099, that income is considered self-employment income. And if it exceeds $400, you still have to file. But if you receive a W-2 and you earn less than $12,400 and you paid taxes, like you had taxes withheld, federal taxes withheld or state taxes withheld, you might want to file so you can get a refund of the money that you gave out because you didn't have to file.
Okay, so they could get money back.
If you gave money away, you had taxes withheld and you made less than the threshold, filing your tax return will get you a refund of those amounts that you paid out.
Okay. So what happens with their parents? Let's say they're under 18, but they have a job. Does their parents still get to file them as a dependent?
So yes, there's no income bracket for a child dependent. Mm-hmm. So it's usually if the parent can claim over 50% of their child's expenses, including like household expenses, and most people live with their kids or their parents are still paying. Right. I mean, kids still live with their parents, or their parents are paying a majority of their expenses for living, they can still claim them. And the child, they can claim the child up to age 19. However, if they're older than that and as long as they're a student and they're under age 24, they can claim by their parent, as long as the parent pays more than 50% of their expense.
Okay, more than 50%. Okay. Thank you, Jenelle, for all that information. Do you have any other tax tips that you can provide our viewers?
Yeah, so as far as the child tax credit, it's going to increase in 2021. So presently it's $2,000 per child under age 17. And then in 2021, it's going to increase to $3,000 per child under age 18. And it could be $3,600 per child under age 6. And also, they're planning to provide this money in advance payments. So basically, they're going to estimate how much it may cost for each, how much each person may receive or each couple may receive, and they're going to divide it by 12. And they're going to send out monthly payments starting in July. So from July to December, you can get an advance of the child tax credit for 2021.
Nice. So that means you wouldn't get it in the next year's tax return. That's what you're saying? Because this is not a 2020
Yeah, so
thing,
if
it's for
they
2020.
start out this summer, you'll receive your start out this summer, you'll start receiving payments for 2021 this summer. The remainder you'll have on your 2020
Oh, okay.
or 2021 tax return filed in 2022.
Okay. Awesome. Lots of info.
Yes, hopefully we're able to hit a lot of the key notes of information regarding this year's tax returns. When are the taxes due? I think they
So
recently got
taxes, yes,
extended, right?
taxes have been extended this year into May 17th, but that's just for individuals, not businesses.
Okay.
So individuals have an extension to both to pay and file or file and pay to May 17th without penalty.
Okay. And I've heard some people say that they still haven't received their refunds from last year. Do you have any information about are those are still being processed? What maybe the IRS has said regarding those?
So they are still being processed. The IRS is on a backlog. As you know, COVID affected everybody. So a lot of them are like working remotely. But yes, there's a backlog of returns. So if you haven't heard from them and depending on when you file, just please be patient and wait. You can also check on the IRS website. There's a link that's like, where is my refund? You can get a status of your refund to figure out where it is and whether or not they started processing your return.
Okay, that's good to know.
Okay.
Well, thank you, Jenelle. Before you leave, can you tell the people your contact information if someone's interested in taking your services? Are you available to provide your services outside of the state of Maryland?
I do. I'm a CPA, certified public accountant, and I do taxes and provide services for all 50 states.
Okay.
So my firm is virtual. So yes, we serve everybody.
Okay. What's your contact information?
So you can find me on Instagram at Osondu Consulting Group, and Osondu is spelled OSONDU. I also have a website, osonduconsulting.com.
Okay, great. And we'll also put that information in our details of the video section. So anybody's interested and you need a professional tax person, be sure to reach out to Jenelle and her consulting firm. And again, she says they provide services for all 50 states. So you do not have to be in the same state. You can be in Hawaii and in Montana, wherever you're located and you're watching this video, you can contact her and to receive her services. Okay. Well, thank you again. Any last comments you want to say? Anything you want to say?
Thank you for having me. If you have any additional questions, you can contact me on Instagram or as noted above. Send me a message on my website as well.
Awesome. So before you go, we want to go into our favorite segment and crown you the Queen of the Week.
Yay.
This is your virtual tiara. Wear it proudly. We love seeing Black women doing their own business, very smart, educated, showing us and telling us and teaching us the way for taxes. So we just appreciate you coming on our show, wear your crown, and just appreciate the knowledge that you shared with our audience today.
Yes, we love celebrating Black excellence and our fellow queens. So thank you again. And our Queen of the Week is Miss Jenelle Osondu. And before we leave, we want to remind Jenelle and all of our viewers to do what?
Protect your throne.
See you next week.